presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing's great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We pick things up on Monday in markets within about 12 points of highs on the S&Ps, and that's all-time highs. Quite the surge higher, continuing the run that we had on Friday, and we are up by, that's gold, but S&Ps continuing the run that we had on Friday. There we go. Up by 1.2%. We're trading right now 3 points away from the highs that we made at about 2 p.m. Eastern time, and you're up about 1.2% in S&Ps. NASDAQ 100, you're up by 1.4%. Tech stocks, Dow up by 1.2% as well. The Dow right now, you talk about a run, man. Yeah, not 1,000 points. We're from 45,600 and we're nearing 47,000, folks. You're talking about almost 1,400 points in the Dow just from where we were on Friday. And the Russell up by almost 2% as well, up 47 points to 2512. Bitcoin participating up by almost $4,500, up 4.2%, 111,180. Ethereum up by 3.8%. Crypto struggling last week. You take a look at the daily, quite a cascade from 127,000 2 weeks ago. That was a straight run. Down to the lows of Friday, 103,000. We're bouncing a bit. We'll see if we do it on some volume. That was a lot of selling coming into the lows of last week. The biggest day in Bitcoin last week in the futures as it traded to the lows of 103,000. Ethereum, not as pronounced, but a lot of selling in that acceleration from about last week ago, Friday, the 10th that is, 10 days ago, to the low that we had on Friday as well. Crude continues to be under pressure. So check out the acceleration in crude. Now approaching the bottom of what could be a little channel line. Crude, I mean, that's a green bar, but that's only a green bar because you gapped open on Friday. Still lower prices. You trade lower with volume on Friday. You catch a little bit of a bid, but crude under pressure, nearing a little bit of support near 56, and that's where we hit today. 55.96 early at about 9 a.m. this morning, crude. All right, we jump over to notes and bonds. So we are 9 days out from a Federal Reserve meeting. And we get the 10-year, sure enough, 3.98. Now, this is what happened last time. As in rates under pressure, you traded higher from August 21st for price this is, into September 17th. So from August 21st until about September 5th, 12 days ahead of the Fed meeting, you peak out and then you get a little bit of a relief pullback. And now what's happening is we're now 9 days out from that meeting, and rates are now with the 10-year under 4%. Critical area 3.98. Rates under pressure. Jump over to the DXY. Quite the acceleration up to 98,950 this morning. Excuse me. This past week. And yeah, we're up by 14 pennies right now at 98.57. Just chopping around where we were on Friday. And boy, gold. For you gold bulls out there. You know, when we were talking about, and we were talking about it last week, okay, we had questions about dust, right? And I was saying, no, I wouldn't be shorting this just yet. You know, Friday's reversal was quite a reversal, folks. Okay, but look at this. You're going to engulf it all. Now, you're not going to do it with volume likely, as in that was some big volume on Friday. But the reason why you don't want to short this market just yet, folks, is because of the weekly charts like that, man. Look at that chart. Up to 43.92 and quite a ramp up in volume, right? It just doesn't stop ramping it up. 1.9 million contracts last week. So to do 1.9 million contracts, and for some reference here, okay, on Friday, we traded 559,000 contracts. 559,000 contracts, okay? There's a lot of weeks, folks, where you don't even do 559,000 contracts. We had some of them. Let's zoom in a little bit. Wow, we did 674 the week is August 18th, 742. That's for an entire week. We just did almost 600,000 on Friday alone. Now, to get 1.9 million contracts, okay, yeah, you're going to need almost 400,000 contracts a day on average, and we've done 300,000 today. So it's going to have to be a big number, but that's a big number, 300,000 contracts. We're trading up $170, not matching Friday's volume. But yeah, there's way too much strength going on in gold right now. It doesn't mean you won't get some extreme volatility and pullbacks, but way too much strength to be in there shorting. Now, silver's looking weaker than gold. Okay, on a daily basis, you got these large sells out there from October 9th, October 14th, and then Friday sell-off as well. And on a weekly basis, still looking strong, though. Okay, but on that daily, a little bit more pronounced on the selling, but look at that, right? Look at that silver, man. Silver, still. That's not the look of a chart that you short, folks. On a weekly basis, you just see higher price with increasing volume, right? More people in the store and they're paying more prices. Well, that's what should happen when more people are coming in the store for the same product. They're going to have to pay more money. And yeah, those metal charts, they look perfect. They really do. Besides that on Friday. They were perfect until Friday, so watch Friday on a much shorter term basis. We look over at platinum. So platinum gave up almost all of last week's gains. You made it up to 1770. We closed out the week at about 1629. We're a little bit higher this week. Platinum's been on quite a run. Not as pronounced on the selling as gold and maybe silver, but still a big volume bar. To the downside, you get this bar from September 23rd out there, brings you back to about $1,500 if that's where platinum could potentially pull back to. Okay, so Apple. The iPhone 17. I've been talking about it myself. I got a 12 Pro Max, folks. I'm holding it down to 12 Pro Max. But a new one's coming, and I might get there on the 17. We'll see. I don't think I'm going to want to wait a whole another cycle, but really I don't have to. It's close. The battery's suffering, the speed occasionally, but one of the things they're talking about is people in a similar spot to myself. Now, you have two different ends of the spectrum, okay? But new iPhone outsells previous models by 14% in the U.S. and China, okay? iPhone 17 outsold the iPhone 16 by 14%. The standard iPhone 17 is in much higher demand, okay? In China, sales are almost double those of the base iPhone 16. So in China, we'll finish this up. The 17 Pro Max also selling well. All-time highs for Apple today, up by 4.5%. Markets in the green. We'll be right back with our man Steve Rhodes. Don't go away, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We get the S&Ps up by 73 points right now, up 1.1%. And right now, folks, as we do each and every Monday at 3:15 p.m. Eastern Time, we're going to talk to our man, Steve Rhodes. And, folks, you can check out Steve's outstanding newsletter. Hit that newsletters tab on the front page at TFNN.com. You'll see Mastering Probability by our man, Steve Rhodes. Folks, remember, every newsletter we have comes with a 30-day money-back guarantee. When you subscribe, you gain access to Steve's newsletter. It's $149 a month. You can add savings on the 6th month in the year, and they all come with a 30-day money-back guarantee, and you get some awesome webinars. And, man, we got a market with some movement right now. Steve Rhodes, good afternoon.
Good afternoon, Tommy. Great to be with you. How are you today?
I'm doing fantastic, man. We got quite a market, Steve, from where we were on Friday and last week, this gold market. And, boy, we had some good football out there this weekend. But yes, we got quite a market. What are you seeing out here, man?
Well, first, we're going to have good football tonight. Tampa Bay against Detroit Lions.
Keeps going.
And we got a Game 7 in the pennant series. So it's going to be a great night of sports out there. So I'll try to take a nap before all that happens. But in the market,
right, I know.
This is a snapshot here, Tommy, as of 2 p.m. I don't think we're that far away. I've got the S&P up 76. I think you said it was just up 71. So this snapshot's pretty probably relatively accurate. But the question I've got at the bottom is, were there any clues on Friday that this rally or a rally was a likely outcome? And the answer to that question is yes. And it's called the Spot VIX Index, and it's referred to the one-day rate of change, which is what this chart here is showing. So one-day rates of change that are less than or below minus 10%, they typically generate what's referred to as an initiation to higher price signal. And those are the green arrows on this chart. The top panel of the chart is the S&P 500. Below that is the actual Spot VIX. Below that is the one-day rate of change, where I keep track of whether it's a plus above plus positive 10% or below a minus negative 10% out there. And Friday's was minus 17.9. So it typically leads to higher price, and that's what we're seeing here. It doesn't tell us what degree of higher price, just simply an initiation to higher price out there. Those were the green arrows. The blue arrows here show us what happens when we have a spot VIX index that has a one-day rate of change above plus 10%, which we typically find generates an overnight rally in the ES mini. It's either a rally, counter trend move, a bounce, a bottom. But what most important here was we had a one-day rate of change below minus 10%, and that's a signal that we should see a rally out there. We also like to watch the spot VIX index in relationship to its 50-day exponential moving average. And if you look at the very left-hand panel of the screen here, lower left-hand panel, what you'll see is that's got the spot VIX index, and the 50-day exponential moving average is the blue line that's there, currently printed at 1738 out there. This chart here, Tommy, takes the S&P 500, and it takes the chunks of time when how the S&P traded when the spot VIX is below the 50-day exponential moving average. That would be by these green rectangles, squares, or what have you. And when how the S&P trades when the spot VIX index is above the 50-day exponential moving average, and that's identified in the yellow rectangle and boxes out there. So spot VIX is a really great tool, and those folks that listen to the Trader's Edge show, hosted live at 11, know that we talk about that when those signals are present. I'll go back real quickly here. When I took this snapshot, and I just noticed it while we were chatting right at the beginning, the spot VIX had a one-day rate of change below minus 10.8%. So we could be getting a second signal today. Now, I've studied this in the past, and two-day signals don't have any more meaning than a one-day signal out there, but we could get another initiation signal move today. Any questions about what I shared so far?
No, but I like those charts in terms of where it was under that 50-day and over. Yeah, that is quite a chart, man. And I always am looking at the VIX, and boy, it's quite a volatility suck out, man. From what were we approaching? I have it up here as you were talking about it. 28.99 on my charts on Friday, and here we are at 18.48. So yeah, no one's paying for premium today like they were on Friday, and that usually says something, as your charts say it for sure.
For sure. So I like to go from the VIX into the S&P 500. I like to do that via the ES Mini. Here we've got the daily, weekly, and monthly time frame. The daily ES Mini still has what I refer to as a Rhodes momentum indicator top, and I think that price is likely going to go target the top of its profile, which is at 68.1225. I'd say that especially if we get that additional one-day rate of change of spot VIX below a minus 10% out there. But the most important thing, perhaps, about this ES Mini and its daily time frame is that a new profile formed last Wednesday, and this profile, it's the dashed green lines. So you can see the dark black number at 66.2185. That's the bottom of its profile. The top is at 68.12. This profile wrapped around the prior profile, and what that typically signals to us, Tommy, is to prepare for a consolidating market out there. So we'll see if that's what unfolds. The daily has a top, the weekly has a TD9 count top, and only a close above the high. The high of that, I believe, is going to be the 68.1225 level on Friday, would negate that topping pattern. So I've got a daily Rhodes momentum indicator top, a weekly TD9 count top, and we are in wave number 7 on the monthly time frame. That wave number 7 can't be confirmed until the end of November. So we really would be paying attention mostly to the daily and the weekly time frame. If I go take a look at the equal weighted ETFs, so I'm going to go from the ES Mini into equal weighted ETFs out here. And the equal weighted ETF for the S&P 500 is the RSP. Typically, the equal weighted ETFs point the true direction of the market. Well, if you look at the daily time frame, we've got a Rhodes momentum indicator top, only a close above its all-time high. I don't have that price point here, but it's about the 218 area, I believe. No, I'm sorry, about 192.50, somewhere right around there. So we've got a daily top. We've got a monthly. Now, here's what's interesting about this is even if we get a short-term pullback, the signals that I'm seeing, and it's really shown here on the monthly time frame, we have a confirmed A to B equals CD pattern on the upside. That should take us into the 218 area. So even if we do get some type of retracement, maybe even a correction, even if it's a couple-month correction out here, the charts are suggesting that they will continue to make that A to B equals CD pattern to the upside. And the equated ETFs typically point the direction. And the important thing is to understand there's still some tops that are present out there. So we're not out of the woods. If I take a look at the Dow, which, as you pointed out, has had one heck of a move out here, right now on a daily basis, price is trading right up into the top of its daily profile. And that's at 40.20. I'm not sure exactly where we're trading right at this moment in time, but we have a daily Rhodes momentum indicator top. We have a weekly TD9 count top, and we are in wave number 7 on the monthly time frame. So all of this still suggests caution. I realize that, hey, we've got these initiation and higher price signals out there, but we still have to take out the topping patterns in order to put on our party hat, so to speak. The Dow itself, if I switch over from the ES or the S&P to the Dow is up against the horizontal trading range. That's here at this 47,296 level. That can be an area of resistance. So again, we're not out of the woods here. So that's on the equity markets. If I switch real quickly to gold, gold's having a heck of a rally, but Friday generated a Rhodes momentum indicator top for its daily time frame. And this Friday is going to complete a TD9 count top, and the monthly chart also in wave number 7 out there. So the charts for gold are saying caution. In fact, if I take a look at the daily charts and weekly charts for gold, silver, and the GDX, each of them have topping patterns. And on the on the weekly time frame, they also have topping patterns. So this is a time, in my opinion, even though everything looks great out there, technically speaking, this is a time of caution.
Patience, caution can be a good thing. I'm thinking a lot of the same thoughts, man. And every day, and then you wake up and gold's up $200, right, Steve? But no, and Friday was quite a day. I feel like maybe that was the first crack. We will see. Yeah,
exactly. We'll see. And look, if we get these tops get taken out, they're going to tell us that we're not even close to the top. But time will tell.
We just let those charts talk and squawk and walk and talk to us.
There you go.
Steve, great information, man. Always appreciate it. Folks, check out Mastering Probability, 30 days money back guarantee. And Steve, we'll check out the program tomorrow. Have a great night, man.
Thanks, Tommy.
Thank you. We'll be right back, folks.
Trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 74 points in gold. We're now just $8 away, and we might do it. We got 29 minutes until 4 p.m., and gold just $9 away. We're taking apart everything we did on Friday and then some, as we're up $170, up by 4% right now. Not quite the volume of Friday. And silver up by 3.1%. So you jump over to Apple, up by 4.5%, $11 all-time highs for Apple. And the consensus seems to be here that they're thinking this might be the beginning of a good upgrade cycle. Don't want to call it a super cycle. I'm not calling it anything, but the data seems to point to the fact that at least early on, okay, in the first 10 days on sale in the U.S. and China, the 17 outsold the 16 by 14%. Now, it varies where you are. The standard iPhone 17 is in much higher demand than the corresponding $800 model last year. In China, sales are almost double of those of the base iPhone 16. But you know what? I don't have what that base number is. What do I always say? Percentages on small numbers can be deceiving. Did they sell a lot of the base iPhone 16 model last year? You would need to know that to make an assessment of what that even means. But nonetheless, and then you jump to the 17 Pro Max. And what's interesting is they say that, particularly in the U.S. Guess what? If I got a new phone, probably just going to do it. Just going to get the 17 Pro Max. I use my phone so much for work, for personal life. And what do they say? It's drawing people who got their last phone during the pandemic to finally upgrade. Well, when did I get my phone, folks? Right before Tommy was born at the end of 2020. Pretty much right 6 months during the pandemic, okay? Drawing people who got their last phone during the pandemic to finally upgrade. Best camera to date. Heat dissipation. Hadn't even heard of that one, but I've heard of camera. The AI features are in there, and then, of course, you get battery life. And that's why the thin iPhone, okay, battery is life. That is no joke, man. Battery is life. And that thin iPhone, I'm sure they're going to find a crowd for it, but when battery is such a differentiator, it's a tough one. Now, talking about the share price, though, okay, they got an upgrade to $315. Okay, Loop Analyst. Now, analysts are right until they're wrong, okay? And they have a lot of great information. But whenever any stock is facing a headwind, okay, the analysts are rarely on a stock like this that's leading the market, okay? So they're predicting that the next cycle is going to go well. We're only 10 days into the cycle, and as I just pointed out, okay, you're 14% above where you were last year. The base model is doing double the business you did in China last year. And so you could say, wait a second, if the base model, there's so many ways to frame certain moments of data for what it's worth. Now, Evercore added it to its tactical outperform list. This may be more than the average iPhone refresh cycle. Now, that's possible. Okay, it's always possible. But, yeah, I'm going to be in that ballpark, and I find myself thinking about it if I have the time, or maybe if I hit that wall where I need to finally. I don't need to just yet, but my phone, we're going on 5+ years, and I use it for everything. Now, here's the problem, though, or at least here's the headwind that you'll face, okay? Shares currently trade at more than 32 times earnings, well above their 10-year average of 22, okay? And that 10 years that they're talking about, now let's go back further. Okay? So if you go back 10 years, this is what's crazy. So you say, is that a fair valuation? What's the equity done since then? Well, you've traded at a 22 earnings per share, and during that time, you went from 27 to 263. You basically went 10 times the share price. And right now, you trade at more than 32 times. Apple trades at a premium to the NASDAQ 100. It's the most expensive member of the Magnificent Seven outside of Tesla. Yeah. Now, 60% of analysts almost recommended buying the stock, the lowest share among the Magnificent Seven, okay, outside of Tesla. It's a valuation story on Apple, so at least be aware of the valuation when you're talking about 32 for an earnings per share for a company that has a lot of earnings for that multiple. 10 days. Not a lot of sample size, but they're off to a good start. And this one out today, Google development Pixel phones. They're going to select 15 people from a pool of entrants who are going to sign an NDA, and they're going to get to try out the new phones. Their super fans group. A little puff piece advertising for Google on Bloomberg today. All right, and this one. How about this one? In terms of tantalizing stories, we talk a little bit of sports, we talk about life. Boy, they're going to make a movie out of this one, man. The Louvre. I was reading about this one this morning. Now, I don't know, they probably don't have the valuation, but some of these pieces, man, look at these beautiful pieces. Now, if they stole it, they got a plan for it. But how do you sell something like this? And you sell it on the black market, I'm sure. Whew. One of the stolen objects they left behind, 1,354 diamonds and 56 emeralds. Oh. 3 or 4 thieves arrived Sunday morning at 9:30, and they fled the scene. They're still being sought, and they used a big crane, a furniture elevator is what they used to jump right up to the second window. Oh. And that's just a bummer all around, because those belong to, you want to have people be able to experience that culture, man. And boy, look at these pieces, though. Sapphire necklace and earrings, Queen Marie Amélie and Queen Hortense. Look at that emerald necklace. Mary Louise. Yeah, priceless in value. You're going to see that one play out, and you're probably going to see it play out in the big screen. All right, and Amazon. They're saying they're still dealing with a few problems. And you know what? Right to them to set expectations low, under-promise, over-deliver. The last thing you want to say is we're done, we're out of it, there's nothing going on, and you still have reports of it online. But there was your AWS problems this morning. Spikes lower at 5 a.m., and you're up by 1.6% with this market, even when you have an AWS outage. And yeah, especially on the East Coast, they were saying. Largely recovered, but all the way from Robinhood to many other companies. They do a third of the cloud on Amazon. Seems like that's a big risk when the whole internet goes down, or a third of it just by one provider and their cloud for technical difficulties. All right, gold's not quite up to last week's highs, but we're right there, up by 4%. S&P's near all-time highs, markets in the green. One of the few things on this chart in the red. The VIX continues to make lows, 1844. Stay tuned, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by 74 points, 1.1%, and the VIX down by 11.2%. So our man Steve Rhodes is talking about that 10% number, talking about the 50-day moving average. And what's cool is, so just even looking at what Steve put out there, great information. Check out Mastering Probability, folks. We talk to Steve once a week. I'm sure if you haven't tried it, or maybe you have, but you think about it every time we talk to him, it's great information. Go give it a try. But it made me think of Tim Ward as well, right? The VIX. So he looks at the SPY VIX. He looks at the ratio. Well, what that does is that functions as a way of when you have the SPY staying at the same price and you have the VIX pulling back even, that's a huge acceleration, right? Well, the bigger way to do that is have the market accelerating higher as the VIX is pulling back, obviously, and we got a huge rally from where we were last week. You were seeing some cracks in there. Tim was talking about it. We'll talk to him Tuesday probably, tomorrow afternoon. And yeah, I imagine that SPY VIX is spiking in a big way right now. You don't have to have the exact conversation to know. As this VIX is plummeting, it's a bullish sign in the market. And the market reacting in dramatic fashion. Yeah, they're talking about NVIDIA over in the Tiger's Den. NVIDIA shares slightly in the red today, down by 0.1%. We check out some of the other chip stocks. AMD up by 3.2%. Broadcom down by 0.4% right now. Intel up by 3.2%. Oracle continues to be under pressure. All right, you're making a run for this low that you had a couple weeks ago. Yeah, this low right here. Couple weeks ago, Tuesday. Oh, I got to go back 10 days. Oh, that'll do it. That'll do it right here. All right, you break below here, you better watch out on Oracle, man. This was the spike low when the story came out that their margins might be in question. Trades all the way up to 320, and boom, we've given it up, and you've given it up with volume on this equity. All right, look at Friday's volume, and you're going to have a big volume day today. 28.2 million shares. You're not going to beat Friday, but you're probably going to be pretty close to what we did on Thursday and that pop higher. Put this on a weekly. Yeah, nothing too decisive, but this thing looks like it's under pressure. This market is performing very well, and there's a problem in Oracle right now. Amazon continues to be under pressure, too. We're getting a bid today, but this thing's been... Look at this run over the last 5 weeks, from 237 to 212. You just lost 10% in Amazon from where we were 5 weeks ago. It's a little bit of divergence. On the flip side of that, Microsoft up by 0.5%, holding up well, and Google. Yeah, Google, that's an all-time high, I believe, right? Up by 1.4%. Yep, there it is. Man, Google's a beast. Let's put it on a weekly. All right, you make a high the week of September 15th. Barely get above it last week without the volume. Well, we don't have volume on the way down either. All right, you make that high September 15th on Google, 137 million shares. You're pulling back on 110, pulling back on 88. Yeah, we were talking about this morning. Some of the rare earths, boy, can't be in more focus than these rare earth companies, right? Let's see how they're trading today. MP up by 2.8%. 17% off where it was trading at 6 days ago, though. And be careful of volume. Yeah, that one almost has volume at the highs. Look at that. Well, you get up and give it up. But it's not a lot of pronounced selling. We come back, we test this high from August. I said this morning. USA Rare Earth up by 12.9%. Let's see what we're coming at. Let's see what they tell us about this company. They engage in mining, processing, and supplying rare earths in the United States. The company holds interest in Round Top Mine in Texas. It was founded in 2019 and based in Stillwater, Oklahoma. I wonder when they got that mine. And this is a $3.5 billion company. And they're a SPAC. I said this morning, USA Rare Earth. So that's a great name. That almost sounds like a little bit too political for what's going on right now, right? And then it's like, oh, it's a SPAC. It's a SPAC that started, look at, when did it start? Right at the end of the year, after Trump had won. So the agenda was on, create a SPAC, USA Rare Earths, magnificent. And boy, the run is on, man. Up to $44, you're at 31. And you get some volume today. Hey, when you're investing in these folks and you have runs over the period of 2-3 weeks where you go from 15 up to 45, back to 25 to 31, realize it's not trading on the fundamentals. So the future is bright for rare earths companies for sure, but it's not trading on the fundamentals right now. So buyer beware when you're trading these types of volatilities. But hey, we got volume at the highs, man. We got volume at the highs on a daily basis. On a weekly, it's going to be bananas, yeah. Wow, that's not good. That's not a good weekly bar for sure. You give up the highs, and you take out this entire bar. This is another one. Perpetua Resources. Let's see what they tell us about this one. Development stage company. Gold, silver, antimony deposits. I pronounce it. And about a $3 billion company as well. Quite a run. More than 10 times the value of where you were. Hey, if they're in gold and silver as well, not quite as bad as USA Rare Earth. But boy, volume off the highs, and you actually close lower with volume. Not what you want to see on a weekly basis last week. These things have been uber strong. On a weekly basis, you have all that volume and you give it up. All right, come on. We're going to get there? We got 11 minutes to take out all-time highs, and we're now within $5. It's not stopping, folks. And look at this dollar. As in the dollar, it hadn't been doing it. Yeah, dollar's doing nothing, man. This is all gold. Whew. Look at this. Up $175. Oh. It's crazy. I'm zooming in on where I was when I graduated college because I remember it, man. I remember the prices. Yeah, I think it was somewhere around here. Yeah, I remember it was in the 2s and it went into the 3s in 2002. There it was. So it kicked off, but what was it? $255, $253 in 1999, and then the run really began in 2001 at $255. And boy, look at that, right? But yeah, as in we're almost up that today, up $175, man. That's got to be one of the biggest days in gold. You tigers and tigresses out there, we haven't been up $200 in a day? Might do it today. We're up by $175. We might have all-time highs by the time I get back. Gold, $4,388.80. We'll come right back, folks. One more segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets in positive territory. We're going to be light on the volume compared to anything that we did last week, and then some. You're talking about right now about 1 million contracts. Last week you were doing 2 million almost every day. Last Monday you did 1.7 million, the lightest volume day of the week, and you had 2.5 million almost on the sell-off a Friday, one before last, so 10 days ago on October 10th. So light on the volume a bit on this bounce, but nonetheless, you get the VIX pulling back. Markets bouncing. NASDAQ 100, you're doing about 400,000 contracts. We did 735 on Friday. We jump over to the SPY and the Qs. That was the futures. We take a look at the volume on the ETFs. Same deal. All right, look at this bounce. Now, we had options expiration last week. Okay, it was a big week. This week, though, 49 million so far. You did almost 100 million in the SPY. You jump over the Qs. Not quite as pronounced, but pretty close. 40.2 million. I mean, that's not how you want to break a high, and we're not going to break it today. But you can see, if you break above this high when you did 97 million, 65, 69, in the 60s, doing 72 million, and then we do 40. Do 40 million. But hey, no sellers in this market right now, and today, none since early Friday, as this market catapulting higher. S&Ps right now, up more than 200 points off Friday's low. The NASDAQ 100 up almost 1,000, and the Dow up about 1,400 points almost, 1,300 and change. And the Russell on a percentage basis, 3.5% almost from where we were on Friday. And gold not quite there. We just did it. We just did it. There you go. It did it for us. Who did it? Who was in there buying? Look at that bar. 4,394.90. We got it. All-time highs as we finish to the tick. All right, now we got to get to 4,000. We'll see if we get there by the 4 o'clock update. Folks, always a fun time. Thanks for tuning in. Have a great night. Have a safe night. Enjoy it, folks. Enjoy it with your friends. Enjoy it with your family. Come back. We'll see you tomorrow morning at 9 o'clock. Thanks so much, folks. Have a great one.